Hello and a warm welcome to Personal Finance. I'm Gugulethu, Cele. Now today in studio I'm joined by Cele, who's the head of personal lines at Mutual and Federal. Now this is to help us understand the importance for insurance when it comes to our assets, but also understanding the concept of self-insurance. Good to have you with us today, Cele, and thank you so much for making time.
Pleasure.
Let's perhaps pick up with the theme regarding self-insurance. When I first read this, I didn't really understand it well, but I understand it has to do with one not actually taking up an insurance policy.
Yeah, so I guess the layman's term self-insurance would imply that you are taking the risk of a loss occurring on yourself. Something as a simple example of having a car accident, a small bumper bashing costs you 20,000 Rand, you saying, I'll pay for the repairs myself. But I think what's important to understand is that there aren't many people in this country that can afford to be self-insured. And I use a simple example, but could be worse than that. It could be a house robbery where you lose a couple of 100,000 Rand. Are you willing to take that risk yourself? So there's genuine definition for self-insurance where people are well enough or wealthy enough to say, well, I'm happy to take the risk. But generally the population that's uninsured should not be taking that risk.
At what point then in your financial situation do you establish that you actually can take the risk by yourself?
I think there's very few people. I know the wealthy in the country can possibly look at self-insurance, but even then I wouldn't advise it, Ideally you should insure your assets, pool the risks so that the volatility in claims, if it's 10 people pooling a risk, it's better than just you yourself taking on the risk. An insurance company will have hundreds of thousands of clients, and the ability to pay out claims becomes key.
Explain that concept to us, because for a lot of South Africans who do have significant assets and get short-term insurance, we always complain about the costs of insurance as well as the excess associated with this. But either way, as you're explaining, this is significantly cheaper and more affordable than actually self-insurance.
Yeah, so I mean, we often hear that I've cancelled my insurance because it's too expensive. But you may be able to get away with it for 6 months, that you didn't have a claim when you cancelled the insurance. But when the rainy day does come, no pun intended, but the storms in KwaZulu-Natal, the tornadoes in Johannesburg, when that does happen and your property, for example, is completely damaged, is it then cheaper? Are you comfortable that you didn't pay for 6 months or even 12 months? But now all of a sudden you've got a couple of 100,000 and claim to play. So you've got to ask the question, can you afford to be uninsured or self-insured? And the answer really should be for most of the population. 99% of the population should be saying you should not be self-insured, you should be insured.
So give us the nitty-gritty then regarding the steps we need to follow in making sure that you get sufficient cover at a cost that is also comfortable on your pocket. Because I think so often South Africans tend to cut corners in order to cut costs, and they don't get the full benefits of the cover that actually suits their needs.
Yeah, so I mean, look, it's a long conversation, but I think what's the essence is to get advice from a financial advisor or a broker if you're not comfortable with the world of insurance, especially if you're a first-time buyer of a car or a home. It's important because if you don't know the insurance world, it can sound or look complicated. For me, it's probably not complicated because I deal with it day to day. What's important from an affordability perspective, excesses can be used to reduce your premium. There's different types of covers you can buy. For example, in motor insurance, you can look at a comprehensive policy which covers you for all eventualities, but you can look at possibly just third-party cover, which basically says, if I cause an accident, that person could potentially sue you, and if you are at fault, the insurance company will pay for the repairs to the other person's car. There's just third-party fire and theft, so you got cover for theft, third parties, and fire, and a bumper bashing on the road is not covered from your car's perspective. So there are options out there, but I think the key is to get advice and to make sure that you learn along the way around the insurance game.
Regarding the insurance game, I understand full, honest and open disclosure is also critical because that also impairs or has an effect on the premium that's calculated.
Yeah, so days gone by, premium rating wasn't as scientific or as exact a science as it is now. So for one common example that I see happening in day-to-day in our claims area is the claims history. We ask clients what their claims history is, how many claims they had in the last few years, and often they don't remember, they forget or misrepresent, saying I've had one accident, where maybe they've had 5. And there's many examples. All the questions that are asked by the insurance company is generally used to calculate your premium. If you misinform or forget or the like, it can prove to be troublesome at a claim stage. So important to make sure that you do the research when the questions are asked and provide the accurate answer.
And also because these misrepresentations might actually lead to you not being covered efficiently.
Absolutely, yeah. Again, premium rating is an important thing for an insurance company. If we end up charging half the premium that we would have if you told us matter of the facts involved, it does put us in a worse position from a premium charging perspective. So we might end up paying half the claim because we only knew half the information, for example. I'm very crudely explaining it, but that's in essence what happens, that we look at the facts and we go, okay, well, if he did tell us that he had 5 claims instead of 1, and that his risk address was Sandton, not Roodepoort, that changes things, and that's what's important to understand, I think. Yeah.
I'm glad you bring that up as well, because it also speaks to how open insurance companies often are when it comes to looking for a better bit or updating your information with them. Because so often I think consumers feel, I'm tied to this insurance policy or cover and I don't have any alternative options. But actually there should be ongoing dialogue, because sometimes your needs change or things are different. Yeah,
things are exactly. We always advise our clients to update as often as possible, and we're a company that deals with brokers or financial advisors. So again, you do have a advisor at your disposal that you should use and communicate with, and at least on an annual basis. Now, I'd say as often as possible, once a month if you can, but details don't change that often. But yeah, it is important to say when you move home, for example, that you should update your insurance details to capture that new risk of your new area that you're living in. Yeah.
I want to sidestep for a moment and get your view on your high-risk profile individuals, who are usually men under the age of 20, depending on, again, the risk profile that's also set there. For those individuals who often feel that, look, insurance is an additional cost and expense on my budget, I'm young anyway, and I'm male, they actually might penalize me for some of these things. Maybe this isn't a good time to get insurance.
Yeah, so profiles that are dangerous, definitely the younger drivers. There's younger males are generally more riskier than younger females, but I mean, I think that goes without saying that it's how it is in the world. But other profiles, I guess, location from a property perspective. Where do you live? Do you live near the coast, near water sources? From a flooding perspective, those are the kind of things we look at. It's a very scientific process of calculating premium now. A lot of actuarial science involved. And trying to work out what exactly the premium should be. I mean, other things to consider, the details of your car. I mean, if you drive a faster car, generally we tend to see that more accidents are caused by faster cars. So those are the kind of things that we look at. There's lots more detail involved, but at a very high level, that's kind of what we look at to understand who's a riskier profile, who's not a riskier profile.
I get you. And at the same time, that shouldn't deter our viewers from actually wanting to get insurance. It actually
absolutely not.
All the more reason to.
All the more reason to, exactly. If you're young, I would suggest absolutely insure your car, because the younger people do cause more accidents, statistically speaking. You might be an anomaly, listening to me, but I would say the average young person should definitely be insured. In fact, in my opinion, everyone should be insured, but all the more reason, like you say. If the premiums are high, there's a reason for it, because we see it in the statistics that you are riskier.
Exactly. Yeah. And either way, that's the earlier they start, the better for them to set up a track record for themselves, because if they haven't had any claims, it will work to their benefit in the future. Insurance
history and insurance claims history are critical in calculating your premium. So if you have been uninsured till you're 35 and you suddenly want insurance, you're going to be charged a higher premium, as opposed to someone who's had insurance from the age of 20 to 35 and now are changing insurance companies for whatever reason. So yeah, it is important also from that perspective. Yeah.
Exactly. Well, we've obviously said quite a bit here, but I'm hoping that we can get several insights as we wrap the conversation up now for our key takeaway points for our viewers. But what are the critical elements that viewers need to be mindful of to perhaps step away from self-insurance and seek appropriate cover? Yeah,
so I mean, I think ask the question, do you want the volatility in your financial income, or do you want financial stability, or do you want to take the risk to increase the financial volatility? And I think hopefully the answer is yes to that. You want to reduce the volatility, and if that's the answer to the question, then you must look at insurance. Speak to an advisor, get advice if you're uncomfortable with insurance. I think important to understand that under insurance in this country, I think the number is about 60% of our cars on our road is uninsured. If that's the case, it also leads to a high insurance cost for those who are insured, because if you have an accident, you like 60% chance that you've had an accident with someone who's not insured in a car. So that increases the cost of the person that's insured, because there's no way to recoup those costs from. Many developed countries around the world have compulsory third-party insurance. Europe, UK, United States all have compulsory. And I know our government is looking at it, but until that happens, I think it's important that we all look at insurance. I'm
glad you mentioned that, because again, for some consumers out there, it's difficult to purchase an asset without getting sufficient insurance. But like you said earlier, some people opt to cancel that cover after some time.
Yeah, it is a big problem for the finance house and the banks out there that insurance is taken out at to get the car off the floor, off the dealership floor, but 2 or 3 months later, clients find it difficult to continue the payment and cancel that. Again, that poses a big risk, because if your car is written off or damaged, you have to continue paying the bank.
For an asset that's not there.
It's not really there. And if you don't, the bank will repossess the car or come after the outstanding amount, So again, all the more reason to insure your vehicle and your possessions.
Exactly. Thank you so much for your time today. So much appreciated. I think we can go on and on with this particular topic with regard to how it impacts on consumers. But thanks again for your time.
Thank you.
That's how we leave it for Personal Finance tonight. A big thank you once more to Cele Abraham, the head of personal lines at Mutual and Federal, for joining us. Do remember that we want to get your views and insights, so tweet any of your comments and suggestions to @CNBC Africa using the hashtag Finance410, or to myself @Gugulethu on Twitter. Until next time though, take care.